Hi guys, this is Martin from Livemarkets.live. We welcome you to another trading day. While it's been a very eventful day yesterday, we didn't have a video update, and the reason for that was, well, trades were panning out exactly as we had expected, and those of you who have been following our updates would be fairly familiar by now about what we had been saying about the US dollar. First of all, we'll just look at the US dollar on where exactly do we stand. If you remember, this is just the hourly chart. I'll take a look at the daily chart. That's where we start our analysis. Now, this is the 90. Follow my cursor here. This is 93.8. This is when we issued the trade that we are now at a very important support. And we don't see this breaking down. Whether it's going to break down or not break down cannot be understood from this chart. It has to be. We have to look at another chart, which is a US 2-year Treasury yield. That's a short-term yield. Generally, spot Forex follows spot short-term yield, though with a little bit of lag. We didn't see this breaking down, and therefore this was a very good support. It was going to be a very good support, and that's when we issued the trade. Now we are well over that level. We are nearly 100 pips above that. Clearly, the level has been defended, and the price action is focusing on the high here at 95.53. That's the next target. We don't see too much standing, and we should get to there fairly quickly. Now that the market has decided that it's going to go higher, and there is a little bit of a gap here in terms of opening between this level here and this level here. So gap continuations are very powerful price action patterns. They normally signal a significant amount of upward or downward momentum in the direction of the gap. So we can clearly see that this is now going to proceed to 96.5 and probably higher. That's just out of experience when such gaps happen in an uptrending market. So very little resistance here on the daily chart. There's a minor bit of cluster here, but that should be cleared up very quickly now. This is a daily chart. On the weekly chart, we see a slightly different scenario. We see this blue line, which is the 200 weekly moving average. That's been going higher. This is suggesting the long-term trend in dollar is higher. What happened here, which was in December of 2017, is a breakdown of this level. Now that is unnatural and abnormal price behavior. Generally speaking, such lines are defended, and we should have seen an upward continuation, but that didn't happen. We saw a move down, which is abnormal, and I believe that should have hurt a lot of traders because theoretical trading will teach you that this level should evoke a strong bounce higher, but it fell down. And as you know, that was because of Trump giving an interview probably in November or so, when he said that he wasn't very happy with the Fed raising rates while other countries were still at very low rates, and he expected the dollar to depreciate. But then somewhere here in April, things changed, or probably in Jan itself, things changed, because Trump gave another interview, this time to CNBC, and he said, well, in the long run, the dollar is going to go up. That was what he said. You could search for the interview. It's on Google in Jan 2018. But markets didn't react much. But that was enough to stem this downward flow. And then somewhere in April, Kudlow came on board. And these are things that many of our clients already know. Kudlow came as an advisor to the Trump team, and he said that he wanted a strong dollar. And the reason why he said that was purely because of the crude oil. The crude oil was rising all through April, all through 2018, and it had touched 68, 69. And this is where, just above 70 is where the US consumer starts to feel the pain. There's a report of Reuters which says that every dollar increase and the crude will reduce the disposable income of US families by $400. That's how dependent the US economy is on crude prices, and therefore once it was touching 70, they got really jittery. They could only do as much with rates increase, etc. They needed the dollar to go higher to curb oil prices, and that's what Kudlow did. He said he wanted a strong dollar, and now just going back to the dollar index chart now, that's what spurred this move higher. And since then it's been going higher. There's no sign of it reversing. In fact, now there was a mild reversion last week, and many people got caught on that short because this week has just reversed it all higher. So the Trump administration wants a strong dollar, and therefore we see a breakout here from 95.5. There is very little now going to stand in the way of a strong dollar. With the government wanting it, Trump wanting it, advisors wanting it, and at the same time, trade tariffs imposed on China and European Union will spur the dollar higher. So it's all looking good for the dollar. So that's the fundamental, the political angle to the dollar trade, and with the price action, not much needs to be said. This is an upward flat formation with a strong upward bias on the weekly chart. Some minor resistance at 95.5 should be cleared up. So the daily and the weekly chart look good for the dollar even now after yesterday's breakout. Yesterday's strong positive move in the dollar. We'll just take a look at the hourly chart. This is for intraday traders if you are planning to get into the dollar trade. Now, this was a breakout yesterday. It all happened after the US reported strong PPI numbers, which is a supply side inflation, and it showed stronger than expected numbers at 0.3%. They're expecting 0.2% month-on-month increase. And that's confirming the fears of many traders, and there is a tinge of overheating in the US economy, and if that be so, there is going to be a chance that the Fed might actually hike faster than what they are pricing in. They could see a 50 bips hike in December or before that, and that could be very dollar bullish. That is why this broke out high. Can we now get in now? This is going to be a little bit of a risky venture. This is actually the kind of pattern that we're seeing. It is a holding pattern for upward move, but we cannot rule out a little bit of downtrend. But I don't see it trending down to 94.4, which is where the next support is. We could see something like 94.6 and then proceeding higher. So you could take a small one at 94.7, keep one lower at the 50% mark at 94.6 of this bar. So it's a little bit of skill here that's required, nothing major, but the trend is up, so you could go long as well. On the 4-hourly chart, you'll see there is a little bit of resistance. It's cleared all the major resistances. This is the downward trending 100 moving average on the 4-hourly chart that was cleared, and then we're staying above this line. So the chances of this now coming down is very slim, and we could see proceeding to 95.2 today. That's the dollar index. We look at the equity markets. If you remember, our view has been that we are now headed to higher highs or new highs on the SPY, the equity markets. We said that when it was at 27.20, now we are at 27.80. There was a little bit of correction yesterday, nothing major. We should see proceeding higher. The primary reason for that is because this whole cluster, this is what we call as, consolidation at the very top in a flat pattern. This line, this blue line, is the long-term trend. It's upward. Always stay with the trend, as we say, unless the trend is broken. So for this trend to break, we need 2,500 or 2,500 to be cleared. That's where this trend is gone or finished, the uptrend, or the bull market is over. But right now, we're nowhere close to that. We've well supported at the 100 moving average, the 200 moving average, and guess what? We are about the 50 moving average as well. So we should proceed higher to 2,900, take out these highs here. So strongly bullish on the equity markets. And now the big one that again we have been advocating, which is the USD JPY, one of our favorite pairs. We have been trading this on and often, but then because of yesterday's breakout, we have not traded that too much. We might be waiting for a little bit of correction, but that doesn't look likely at all. Now this is a move here, 100 and the move started somewhere at 110.4. If you remember, we closed the weekend at 110.4. Clients were emailing us saying, will it go down to 110, 109 point? Looked very likely at that point of time because it was at this overhead resistance, and we had said the chances of this flowing down to 110 is very low now because The time for a dollar wave higher is now upon us, July midweek, and therefore it will break out. And 2 days later, yesterday, Wednesday, we saw this big breakout, 110.8 to 112. That is what we call a clean breakout. It reached the oversold levels here. This is the third standard deviation, or the second standard deviation of the 100 moving average. So we paused there, but this morning again we are going higher. But so the retracements are very very narrow. It's not deep, and that just all suggests very good, powerful uptrend that has begun. It's best to stay with the trend. No chance. There is very little chance of any major correction. At the most, you should get 112, but that looks slim as well. The big risk, if you do get 110, 111.8, that's where you want to buy. That's where it becomes a very good buy, because then you're proceeding to 113. So that's a good 120 pips. So we'll have to wait and see if 111.8 can be upon us. Couple of comments from Trump about NATO and Germany will do it, but don't get too worried about it. If you miss it, you miss it. But if you do get 111.8, it's worth the go. You can keep a stop at 111.5 and go for 113. Great risk reward and very high probability of hitting the targets. But if you don't get it, then well, you'll have to wait for 113 and then wait for the correction down to 112 before you can take another long. So that's USD JPY, a good breakout. That's a confirmed breakout for us. That one that we are very happy about. We've been suggesting it to you. Where are we on Euro USD? Now this is a pair which been taking some time. This is a good breakdown. It's a clean breakdown. It's just broke off. There was a mild move up yesterday to 107, 1.1750. Some clients have taken manual shots. Congratulations to you, done very well. That happened because of some fake news on Reuters suggesting that ECB was in view of an earlier hike. That's just impossible. That's not going to happen. And then soon after that, the whole thing collapsed. Now this is a clean collapse, and such collapses are normally will be continued for down. So we can see that this low here at 115.50 will be targeted by the traders today. So this is going to go down. There is now, just to inform some of you, there is a barrier option at 115, 1.15. That's somewhere here. So 1.15 and 1.1450 are barrier options. The USD JPY had barrier options at 111.5 and at 112. If you remember, both of them were taken out yesterday in one swoop. We're expecting the same with Euro USD. So the 1.15 level and 1.1450 levels both are on target of the traders. This turn down is confirmation that we're going to continue the downtrend down. So be short the Euro USD. It's a good short term. Excuse me, and there's a very strong strong likelihood of this following down, and the risk reward is very good. You could keep a stop about 1.1750, and you're playing 180 pips to 1.15, and if you have the stomach, go for 230 pips, that is 1.1450. If you and that's how you make the big money, and those are the risk reward trades that you must take with decent size to make some serious amount of money. Today's Thursday. Today's a US CPI data. If yesterday's PPI was anything to go by, the supply side inflation, today's number should be a very strong beat, and that's going to pull the dollar index higher. So there is overheating in the US economy, and I get the feeling that they've been trying to control it, but it's now starting to really come out in data. If you remember, Trump had earlier said, last 10 days he was tweeting about how the oil prices are very high, and that just shows panic. For a president of a free world country to say that the oil prices are that high, that just shows they're unable to control the prices. And every dollar increase in the crude prices reduces disposable income of the US consumer by $400. They're paying more at the gas station. That's not money to the US corporates. They're all going in the import of oil. So it's just a very panicky situation for the US, and they are trying to control crude prices. And what they're going to do, and they're planning to do, is to let the dollar really rip higher. And that's going to pull the crude oil prices down. The crude oil is already down from 74.5 or 75 now to 70. And as you know, we were short here at 75 again. If you're following our videos, we said this is a topping pattern. We will see lower prices, and this target at 64 is now in view. Possibly we could see 62 as well. So crude is a good clean short. Gold is a short. Don't touch gold. That's just looking very dicey. It could just fall and slice through. Bitcoin is a sell. So anything that stands against the dollar is now a very clear sell, because the administration wants the dollar going higher, and that's just to control the crude prices. So just it's best to stay with that view and with the trend. Dollars ignited higher, and therefore we stay with that trade. So Euro USD short here 1.1680. Prices are there at 1.1680. The best you go short now before the traders wake up and pull it down by 50 pips, and then you're wondering, will we ever get a higher price? What about the pound? Well, the GBP USD has a barrier at 1.3. As you know, these barriers are going to be taken out, just like the USD JPY has taken its barrier. So the barrier is 1.3, so that's the target, 200 pips down. It's a clean sell. I don't see any reason to long the GBP USD. There's just no stable bottom at all. We're looking at least 1.2940, which is the oversold level on the daily. We could overshoot that down. Stay with short GBP USD. More than 200 pips here to be had. Stay short with Euro USD. Most 200 pips down is available to take on that. What about the USD CAD? As you know, BOC hiked the interest rate yesterday. The problem is markets don't care. It's just a trend that is pulling higher, and that's very dangerous for the CAD, because if on a day that the central bank hikes and its currency sells off by 100 pips, that's just very dangerous. We're looking at 1.36 for the Canadian, for the USD CAD trade. Be long. We have been long here at 1.31, as you know, and we are very happy with that trade. Keep the stop at 1.3040 on the low of this day yesterday. We expect a continuation today. The reason why it's really going higher is oil is correcting. It's very closely linked to oil. Secondly, NAFTA deal is nowhere near signing yet. So before that, we should see a strong move to 1.36 before any kind of correction, if at all. Though many believe that this is going to go much higher because of the Canadian banking crisis that's upon us. So we on USD CAD is again go long. We're not trading anything other than these four currencies as of now. Equity markets is going to go higher. What about the yield? It's never complete without really looking at the short-term yield. Where are we? That's US2. That's a short-term yield here. Well, there's nothing much to be said. As you know, this is just a strong uptrend. This is a short-term yield. Just imagine 2.6% on a 2-year US yield. You know, that's just risk-free money, and you're getting that. And this is for comparison purposes negative in Germany. So, and this is negative in Japan. It's for a country like Australia and Canada, where there are various kinds of crises, and Australia because of the trade tariff on China, Canada because of the NAFTA risk, those guys are giving you 1.850 and 1.996 in Australia. So, whereas in US, with a booming economy and very strong, stable government, we're getting a higher risk-free. So higher risk-free short-term yield. So where will money go? It's very simple and straightforward calculation, isn't it? It's just going to go to the US, and therefore the USD is in great demand, and it's going to get into greater demand this week onwards. And I think this dollar wave will continue at least till September. So don't go short against the dollar. That's the one trade. You don't want, even if you don't want to long the dollar, but do not short the dollar. All that you'll get is in between some few pips, but it could hurt you really badly because the dollar is ready to go much, much higher. So we are long the dollar against everything, basis the yield, and what we didn't look at today is, well, it's just the COT. That doesn't change every day. It's just a weekly thing. As you know, this is the US dollar to the JPY, and this index here, the COT pair index, has gone above 80. And this was the reason why we said we could see much higher prices than the USD JPY, and that just started. So we should see much higher prices now in the USD JPY, 115. And if we see a confirmation of this weekend as well, it's above 80, then we are probably in this phase between 2014, where it was consistently above 80 for a long period of time before it topped out. And but it had moved nearly 1,500 pips then. So we'll just have to wait for this weekend and see how the COT index, pair indexes, commercials are playing the USD/JPY. They are the insiders, they are the hedgers, they need to hedge the exposure to the yen. So they probably and possibly move faster than the retail traders with more conviction, and they're more accurate in the way they look at these things. So that's it from our side. We've looked at all the major ones. Be long the US dollar. Today's CPI data. Hopefully you'll all be tuned in at that point of time. This is Martin at Livemarkets.live. Thank you for listening. See you tomorrow.